If a client paid you $8,000 and sent you a 1099, that does not mean you have $8,000 available to spend. The part new freelancers usually miss is that nobody may have set aside money for taxes. My name is Mitch Caldwell, your Modern Day Tax CPA, and I'm a licensed CPA here in California. This is general tax education, not individualized tax, legal, accounting, or financial advice. Today, I will show you what a 1099 means, the 3 tax responsibilities it can create, and the simple system that helps prevent an ugly surprise later. The short version is this: a 1099 is generally an informational form. It tells you and the IRS that someone paid you money. It does not usually mean taxes were withheld. It does not usually mean the income is optional. And it does not mean you only report the income if the form shows up in the mail. For a lot of people, the big shift from W-2 employee income to 1099 income is that you may now be responsible for tracking income, tracking expenses, and planning for taxes during the year. This is where people get caught. The first thing to understand is that a 1099 is not a tax return by itself. It is a reporting document. If a company, platform, or client pays you, they may send you a 1099 showing what they paid. You may see forms like the 1099 NEC, a 1099K, or other versions depending on the type of payment. The exact form matters, but the beginner level concept is simple. Somebody is telling the IRS, we paid this person. That means if you ignore it, the IRS may still have a record of the income, and this is not a great place to mess around. You see, this is where tax social media sometimes creates confusion. People act like the form creates the income. It does not. The income exists because you were paid. The form is just a record of it. With a W-2 job, your employer usually withholds federal income tax, Social Security tax, Medicare tax, and maybe state tax from each paycheck. With 1099 income, that usually does not happen. You might receive the full payment up front, which feels great until April shows up and asks you what you did with the money. Imagine you made $8,000 from a side hustle. If no taxes were withheld, that does not mean there is zero tax. It means you need to account for income tax and possibly self-employment tax depending on the facts. This is where the boring answer saves you money. Set aside a portion of 1099 income as you go. The exact percentage depends on your full situation, but the habit matters more than the perfect estimate when you are starting. If your 1099 income is from a business or side hustle, you may be able to deduct ordinary and necessary business expenses. The plain English version: the expense should have a real business purpose and be connected to earning that income. For example, if you do freelance design work, software used for client work may be a business expense. If you drive for gig work, business mileage may matter. If you buy equipment used in the business, that may matter too. But write-off does not mean free. It also does not mean anything you can vaguely explain at dinner becomes a business deduction. That is not how the IRS wants you to think about it. The right question is not, can I make this sound business-ish? The better question is this ordinary, necessary, documented, and actually connected to the work? Another thing new freelancers miss is estimated taxes. The tax system is generally pay as you go. Employees do that through withholding. Self-employed people and side hustlers may need to do it through estimated payments. If you wait until filing season to deal with all of it, you might not just owe tax. You might also run into underpayment penalties depending on your situation. That does not mean every tiny side hustle automatically requires panic and forced spreadsheets, but once the income becomes meaningful, estimated taxes are worth understanding. If this sounds too easy, that is usually the tax warning light. One more beginner mistake: thinking income only matters if a 1099 arrives. That is not the rule. If you were paid for work, you generally need to consider whether it is taxable income, even if the client does not send a form, sends it late, sends it to the wrong place, or sends a number you need to reconcile. The simplest habit is to keep your own income log. Do not make tax season depend on your inbox behaving perfectly. Your inbox has other priorities, mostly coupons, chaos, and spam emails. Here are the big mistakes I see people make with 1099 income. Firstly, they spend the whole payment like it's a W-2 paycheck after withholding. It is not. Some of that money may need to be reserved for taxes. Second, they do not separate business and personal records. Even if you do not have a formal business entity, clean records make tax time much easier. Third, they overcorrect and start calling everything a business expense. That can create its own problems. A deduction should have a real basis, not just confidence and a highlighter. Fourth, they ignore state taxes. If you live or work in a state with income tax, federal tax is not the only thing to think about. And fifth, they wait until the deadline. Tax problems are usually less stressful when you find them early. So the plain English version is this: a 1099 usually means someone reported payments to you. It often means no tax was withheld. You may need to track income, track expenses, understand self-employment tax, and possibly make estimated payments. You do not need to become a tax expert overnight, but you do need a system before tax season. Next, watch the W-2 versus 1099 breakdown because it explains exactly why freelance income feels so different from a normal paycheck.